In this video, we're going to be talking for a few minutes about everybody's favorite topic, lost inventory, damaged inventory, and dealing with returns. But first, every day that I'm making a video, I'm sharing my daily revenue and my inventory lab profit. And as we can see that the inventory lab profit is super, it's a lot more accurate looking back in the past. It's showing a total profit of $2 today with 1,786 in sales, and it literally showed the inventory lab sales for today showed about $10. So it was it's a little inaccurate today, but sales so far with it being 12:30 p.m. is around 1,700. But today we're going to talk about lost inventory and returns, and there's a couple different perspectives that we should look at. I'll just be kind of talking about this in general. Number one, and you're just going to hear me harp on FBM being so much better than FBA on this channel, is that like dealing with all these things with FBM is much easier than FBA. Because FBA will sometimes lose your stuff. So if FBA is losing your stuff, you need to file claims in order to get these items back. And if you're doing eBay to Amazon, which is mostly what I talk about, there's certain periods of time where the receipts will work in order to file claims and get claims back. And then there's other times where it's not going to work as well. There are also services that you can use, like 𝗖cie or what's another one? They're basically just reimbursement services that they'll file the claims for you, and you still have to give them like the invoices so that they can file the claims, and then they just file the claim and they take 20% or 25%, and they do the legwork of filling out claims for you. So that's a route you can go if you want to. It's mostly useful if you're doing FBA. But this whole situation is you do need to figure out at least how to track and know that you are losing inventory, because some people don't even know that they're losing inventory. And they're just seeing that they're selling stuff, and the stuff that actually gets listed in their account is selling and is selling for profit, and that's great. But they could be profiting 5, 10, 15, 20% less than they think they are because they're actually losing items. And if you're running a really low ROI business, return on investment business, losing inventory is an even bigger deal for you. Because let's say you buy 10 items, they're all $100 each, and you lose one of those items, then you've already lost kind of like 10% of your buy cost. And so if you were running everything at 10% ROI, everything else sells perfectly at 10% ROI, but you lose an item, that means you just break even, or at least I think that's how it works. And this matters less and less as you raise your ROI. So that's one reason I've been so focused on raising my ROI, is because dealing with lost inventory, damaged inventory, and with returns has never really been my forte in the Amazon space whatsoever. Like I've always had a higher return rate than I think what is average. Right now it's around 14-ish%, which is better than it has been in the past. And I do sell electronics and in high return categories, so that's part of it. But like this whole realm hasn't been my forte, and so I've basically made it so that I don't have to be as good at this by having extremely high ROI. But still, even in that situation, you have to deal with this. So like if stuff's damaged, you can't just be like, oh, my $60 thermal printer is damaged, like, or my $120 thermal printer is damaged. Like, you need to sell that for parts. Or at the very least, if there's nobody in any kind of market anywhere who wants this, you should at least write off the buy cost as a loss. And that's something that I'm tracking all the time. We always want to make sure if an item is returned and is broken and it's not sellable in any way, shape, or form that's worth our time, we're going to write off that buy cost for sure, because that's one of my biggest expenses every single month. That's why there's other videos that I've talked about how my costs per month are around $8,000. I often have anywhere between $3,000 and $5,000 worth of mostly broken inventory. And that just happens sometimes when you're in categories like electronics and office supplies, and especially with bigger items in those categories as well. So 100% we're writing all of those off as a loss, and we're at least not going to pay taxes on that. And so we're definitely tracking that. Also, if you're doing eBay to Amazon, well, this is even more so if you're doing regular online arbitrage, you need to be making sure that the people that you're buying from, whether it's online stores or whether it's eBay sellers, make sure that they're actually, shipping the item that they said that they were going to. There will even be situations sometimes where the tracking number shows that it's delivered, but you never received it, or your prep center says that they don't receive it. And you also need to be writing off those losses and preferably looking into those situations to try to get those things resolved. So like, for example, for eBay, I use the E to A master sheet that Rake and Profit has, and every several weeks we just go through and check all the transactions, and anything that hasn't been delivered we start a case with eBay, and almost all the time we get a refund because the seller has not showed that the item has actually been delivered. So yeah, all of this stuff is super important. I know a lot of sellers will just, whenever they have a return or damaged inventory, they just throw it in a pile and they just don't look at it for a year or two. And like, that is part of the privilege. If you have money and like you're fine, you can do that if you want to. But if you're trying to cash flow in the best way possible, and be sure that you're actually making money overall, I would not suggest that. I would suggest dealing with that on at least a monthly basis, if not more, because that stuff is still worth something and people will still buy that from you. And at the very least, like, write off the items that are getting broken and lost in your taxes. That way, let's say you made $100K this year, but you wrote off an extra $11K of losses in damaged inventory. Stuff that you actually didn't make that extra money. Why pay taxes on that extra money? Not financial advice. Contact your CPA and figure all that out for yourself, but that is my experience. All this stuff is super important to deal with. Not the most fun video, but that stuff is really important if you actually want to make it in the long term. For example, a while ago, my little brother decided he was going to start doing Amazon FBA, and he was doing it. He was trying to do it completely remote with the prep center and with used items. And one thing that we didn't keep track of super well is on the back end of FBA, if items go stranded and aren't active, they'll get turned into unfulfillable inventory. And he just had in his settings that they would just get disposed after a certain amount of time. And he wasn't tracking that whatsoever, and he ended up losing several $1,000s worth of buy cost of inventory just because of that. And so you have to understand like what's going on with your Amazon account in all the different facets. And like, if you're talking to friends and like figuring this out together and watching a lot of content like this and other people's content, like, you'll figure that out. But if you're not taking Amazon super seriously and it's like completely a hobby for you, it just ends up getting riskier because you could overlook something like that and you end up losing some money. So all this is super important. Hopefully this was helpful. If you have any questions, please leave them below in the comments. I do have a free Discord. I'm going to put the link down in the description. Sometimes the invite link bugs out. So if the link isn't working, just comment and I'll give you the right one. Hope you have a great rest of your day and take care.